welcome you to this candlestick video. I want to show you the formation of candlesticks or how candlesticks are formed. Candlesticks provide a visual representation of price movements, summarizing important information a trader needs to know in one single bar. They are widely used because they show so much information in a very simple format, and it's easy for traders to spot patterns that can help them make decisions on the market. That is for candlesticks. Now let's see what a candlestick is. A candlestick is a single bar on a candlestick price chart, showing traders market movement at a glance. Each candlestick shows the open price, low price, high price, and close price of a market for a particular period of time. Here is a candlestick. A candlestick has an open price. An open price is the first part of the candlestick to form, or the first impact when a candlestick is forming. Before that, let's talk about the colors of the candlestick. Back in the days, candlestick used to have white and black color. The black was for a bearish candlestick, while the white was for a bullish candlestick. What I mean when I say bearish and bullish is this: when the market is trending up, we said that market is bullish, and when a market is trending down, we say such market is bearish. So is the candlestick as well. We have a green and a red candlestick. In a green candlestick, the market opens below and closes above. So the direction of the movement is from down to up. On the red candlestick or bearish candlestick, the market opens at the top and closes below. So the movement is from up to down. So this is the difference between a green and a red candlestick. Again, using this green candlestick as an example, if this candlestick opens here, as you know, it keeps moving up and down. This low means the lowest point the candle traveled during its formation, and this high means the highest point the candlestick traveled during its formation before finally coming here to close. And when a candlestick closes, a new one begins to form to the right of the previous candlestick. We're going to see this in a live chart. So with this explanation now, I've been able to show you the open price of a candlestick, which is the first impact before the candle will continue to form, the low price, which is the lowest point it traveled during formation, high price, which is the highest point it traveled during its formation, and the close price, which is the last impact on the candlestick before a new one begins to form. And for the case of this red candlestick, the open price is going to be here, and the close price is going to be here. That means we have a downward move or a bearish move. Again, the green body of a candlestick. We have seen the high and the low of a candlestick. We have also seen the open price and the closing price of a bullish candlestick. Now, the colored parts of the candlestick is known as the body of the candlestick. A bullish candle opens low and closes high. It opens low and closes high. So it is bullish. While a Bearish candlestick opens high and closes low. So here is the movement, the direction of the movement. It opens here, and this is the highest point it traveled during its formation, and this is the lowest point it traveled during its formation before finally coming to this place to close. This pin part of the candlestick is known as the wick or shadow, or you can call it shadow. So this is simple explanation of candlestick. Now let's go down and see what this place is saying. It says the green means the market have moved up. As you can see here, when something opens below and closes above, the movement is towards the up direction. So because of that, the market is bullish over the period of the candlestick. The period of the candlestick here means that when you open your charting software and you go to 15 minutes, for example, what it means is that each candlestick you see there formed within 15 minutes. If you switch your chart to 1 hour, it means each candlestick you see there took 1 hour to form. Now the red one means the market has moved down. The market is bearish over the period of the candlestick. Move down means it opened at the top and closed below, so the direction will have to be to the downside. And let's talk about the upper shadow, which is this. This is the upper shadow or the wick. It shows the highest point price reached during this candle formation, and the lower shadow, also known as the tail or lower wick, shows the lowest price reached during the period of the candlestick formation. Now I'm going to explain the candlestick based on these 8 items I've listed here. Now I'm going to look at the relationship between candlestick and time frame. It says each candlestick represents that time frame. So let's head over to the chart and see the relationship between candlestick and time frame. Here I'm on 1 minute, as you can see, and here is just a timer. There's something you need to know here. Since I am on 1 minute time frame, it means each of these candlesticks you see here took 1 minute to form. As you can see, this is a countdown timer. When this timer gets to 0, this candlestick will stop forming and a new one will begin to form to the right. So I would like you to follow me as we count down. 6, 4, 2, here is a new candlestick forming, and this one will continue to form until this timer resets to 1 minute. Now why is it forming under 1 minute? Is because we are on 1 minute time frame. In the same way, if I switch over to 5 minutes time frame, here is the timer, and right now the timer is saying 3 minutes and 10 seconds. So it means that in the next 3 minutes this candlestick will close and a new one will begin to form. That is what it means. So the relationship between candlestick and time frame is that any candlestick you see on a chart is equivalent to the time frame on that same chart. Now we have seen the body of a candlestick, the open and the close. But let's go to the chart and I will show you these 4 items. Now we are at the chart and on 1 minute time frame. I want to show you the body, the open and close of a candlestick. Now as this candlestick is about to close, because the time is almost done, we're going to check the first impact when this candlestick closes. So follow me. Five, and here is the first impact. So that is our open, and you can see the candlestick is currently below the open. That is why we have a red candlestick. When the candlestick goes above the open, we are going to have a green candlestick. So this candlestick is going to form until this time resets to 1 minute and is to close. And when it closes, we are going to mark the point where it closes as well. So follow me as we count down. 3, 2, 0. This is the closing point of this candlestick. So when the candle opens at the top and closes below, it is a downward movement, and that is why we have a red body. You can see that at the top here there is no wick at all, and below here we have a very tiny wick. So when this candlestick closed here, the next one opened here, and upon opening, price went down. This wick shows the lowest point price traveled, and now price is moving up above the open. So whenever price is above the open, we're going to have a green candlestick, and price closes, and here is the open of a new candlestick. And watch what is happening here. If price goes above the open, it becomes green. If price comes below the open, it becomes red. Let's get rid of this. So this is the open for this candlestick. And we're going to wait to see the close. As you can see, this is the point that the price traveled to. So that location is marked with a wick or a tail. Okay, then it closes here. And a new one started forming here. This is the open. And since price is below it, it has to be red. If price moves above the open, it has to be green. So this is what actually gives the candlestick its color. Is the position of the open and the close of a candlestick. We have talked about the color, and we said the open and the close is responsible for the color of a candlestick. So let's talk about the length of a candlestick and momentum. We are still on 1 minute time frame, And remember what we said? We said that each candlestick you see here formed under 60 seconds or 1 minute. Now, why are some candlesticks very tiny and why are others so fat and big? Here is a simple explanation for it. The green candle is known to open below and close above. So in this case, when we have more buyers in the market, we're going to see a green and full body candlestick. In our price action class, this is regarded as a Marubozu. So when you have more buyers in the market, you're going to see a long green candlestick. Same way, if you have more sellers in the market, you're going to see a long red candlestick. So it means that sellers are pushing the market down while buyers are pushing the market up, because when we go up, we buy, and we come down, we sell. So sellers are pushing the market down and the buyers are pushing the market up. In a case like this, it's a time of indecision in the market. The buyers are pushing, the sellers are pushing. So this is the reason why we have different length of body of a candlestick. It tells us what is happening in the market. It tells us the pressure of the market. It tells us if we have more buyers or more sellers in the market. And situations like this, it could mean we have equal buyers and sellers in the market. So how do we read candlestick charts? By looking at different elements outlined, you can see briefly which direction the market has moved in. When you have a red candlestick like this, it shows that the market moved down. And if you have a candlestick like this, it shows that the market moved up. So the candlestick tells us the direction of the market, or where the market has moved. Now, when we see these candlesticks on a higher time frame, it gives us a better direction of the market. Whether the movement was linear, if there is a wick or a tail, this indicates that the movement was non-linear. Example, if you have a long body like this with just a little wick, this shows a linear movement. But when we have a small body and a long wick, it shows that even though the candlestick opened here and closed here, which is close, very, very close to each other, this tail and wick shows that the market was moving this way before finally closing close to the open. So this kind of movement is not linear. But when we have an open and a close here, it shows a straightforward movement. So again, the opening and close price. A candlestick can tell us the opening and close price depending on the color of that candlestick. It can tell us the highest and the lowest price within the time period represented by the candlestick. So what are you going to take away from this video? Candlesticks are fundamental to traders. and show important information at a glance. This information includes: candlestick can tell us the market direction using the color. It can tell us the opening price of the market. You can also know the closing price of the market, the highest price, and the lowest price. There's something you need to know, which is very, very important. In as much as a candlestick like this tells us more about what is going on in the market, you will discover that as you progress into this course, you will see that collection of so many candlesticks also gives us information about the market. Not just one candlestick alone, but the pattern of several candlesticks. If I can simply show you something here. If I consider this candlestick you're seeing here, I can deduce information from all this, and that information is that we are in an uptrend. But just one candlestick alone cannot tell me the trend of the market, except if we happen to see one candlestick on a higher time frame, such as H4, H1, and above. You will discover that as we progress into the course, every candlestick selected here can be merged into one single candlestick if I move from a smaller time frame to a larger time frame. In fact, let me give you a quick example. If I go to 15 minutes, for example, now I have one candle here, 2, 3, and 4. When I switch to 1 hour, this 4 candlestick is going to become one candlestick. So let me do that. So I switch from 15 minutes time frame to 1 hour. So you see that this is our candlestick. But when I go back to 15 minutes, it's going to become 1, 2, 3, 4. And that is very easy to understand because we have 1, 2, 3 for the red one, and 4 that is forming. And each of them is 15 minutes. When you have 15 minutes into 4, that's going to give you 60 minutes, which is equivalent to 1 hour. So in that same way, we could merge all these candlesticks to this place. I can go to 4-hour time frame, and the information from here to here lets me know that we're just through with a downtrend and we're about to begin an uptrend. So we can use one candlestick and we can use collection of candlesticks to know and analyze the market. So I hope you got value from this. That's all for this video. I will see you on the next one.